Hey, what's up, my friend? So in today's video, I just want to talk about Facebook, right? It has declined 20% in a day recently on this candle here. And now the question is, should you be buying Facebook or should you be selling? So kind of like analyze this, right, from different side of the coin, whether you're an investor or whether you're a trader. So first and foremost, right, let's look at this Facebook chart. Also, now it's called Meta, right? From inception, right, since 2013 to right now. So if you look at Facebook right now since 2013 when it IPO, you can agree, right, that this stock is still in a long-term uptrend. How do I know that? Because if you look from left to right, you can see that this stock is actually trending up higher over time. So no doubt we have this 20% decline recently, but if you look at the macro perspective from the long-term basis, this stock is still in a long-term uptrend. So once you can agree with this, right, then let me just point out a few other things. You can see that this stock, over the last few years or since its history of trading, it is common for it to drop, 30-40%. Like from this highs to these lows over here, that is a decline of about 44%. Okay, if you just calculate from this highs to these lows, there's a drop of about 44%. From this high to this low, this is a drop of about 38%. Okay, and right now from this high to this low, how many percent is that? Well, that's about 40%. Okay, so let's answer the first question, right? Is this a good time to buy? Well, if you're a investor and you believe in the prospects, right, the fundamentals of Facebook, and you think that at $380, Facebook is a buy, then guess what? Right now, price is trading around $240. It's even a greater buy right now because you're pretty much, getting to buy it at a 40% discount relative to the highs it was at over here just a few months ago. Okay, so from a investing standpoint, you have to ask yourself, do you believe in the fundamentals of Facebook? Because if you do believe in it, right, then hey, this is a pretty good time to buy, right? Because it has just declined 40% from the highs, especially if you think that at $380 Facebook was a buy. Right now, it's a greater buy. Okay, so that's for the first side or the first camp of people who are more towards the investing sides. Second part is the traders, right? So trading, right? If you look at the trading from a daily time frame, right, or anything lower, okay, I won't be interested to buy Facebook because the trend is just towards the downside, and I'm not interested to short stocks because shorting in the stock market, to me, it's kind of like it's a difficult game to play compared to staying on the long side. So as much as possible, I like to remain long in stocks. If stock is in a downtrend, I will just remain in cash and look for something else. But if you look at Facebook on a weekly time frame, right, you can see that this is actually still in a long-term uptrend, and where might buying opportunities be? So as a trader, if you're a long-term trader who trades off the weekly time frame, I wouldn't recommend buying just yet, because the next question to ask yourself is, where do you set your stop loss? If you were to buy right now, do you set your stop loss at 220 because that's a nice number? Or do you set it at $200 because that's an even nicer number? Or do you set it at 180 because you like that number one? So you can see that there's all these questions to ask, right? And the thing about all these three levels is that, is that the price could just continue grinding down lower, or, hit down lower and just hit your stop loss. There's no like price structure that you can reference against to set your stop loss. There's like no higher low, there's no like swing low that you can reference, right? Because right now the price has just hit down lower, and the momentum could just follow it through down lower as well. So from a trading standpoint, what I would like to see instead is buyers stepping in, coming in to buy this stock, right, and about to take it higher. So how do you get this insight, this clue of this market? So one thing that you can do is, let me just share with you, is that you can look for a bullish hammer like this, right, to tell you that buyers are stepping in. Because when you see a hammer like this, it tells you that at one point in time, right, the sellers are pushing the price near these lows over here, but the buyers eventually step up higher and close near the highs of the wick. So this tells you that buyers are stepping in. I mean, if you see a bullish hammer, that could be a signal for you to get long on this stock. You can just simply enter on the next week open, or if you're a cheapskate like me, usually you can also use a buy limit in order to place your trade. As for stop loss, you can now reference this low, right, this most recent low, to set your stop loss. You can actually set your stop loss a distance below it, possibly somewhere about here. Okay, so in this case, if let's say you got long and Facebook continues down lower, hitting your stop loss, chances are this downward move, right, is likely to continue lower, and you want to get out of the trade, right, at least from a trading standpoint. So this is one way you could use to time your entry into this long-term uptrend. And also, speaking of this long-term uptrend, I also want to point out is that Facebook is right now also at an interesting technical level. If you overlay with the 200 period moving average, you can see that Facebook has bounced off that level once, rallied higher, second time, rallied higher, and now we're back here for a third time. Will it rally higher again? Anyone's guess. Okay, and that's not all, right? It has also come towards this area of support, right? This area of support, which you can see, which is around the $240 price point. So multiple confluences coming together, but the key thing is that, I don't want to just buy yet. I want to look for a bullish entry trigger to go long, and in this case could be something as simple as a hammer on the weekly time frame. So now, is this the only way that you can look to enter a trade? Well, not quite, because you can also use the daily time frame to help you time your entry. So earlier I said that daily time frame there wasn't anything, but if I were to enter on a daily time frame, this is the setup, right, I'll be looking for. So on the daily time frame, okay, just a quick recap, right? This is actually the area of support I drawn earlier, right? What you can look for is for the price to make a higher high and a higher low to tell you that the buyers are stepping in. So as of right now, you look at this chart on the daily time frame for Facebook, it is making a series of lower low and lower high. Lower low, lower low, lower low, and this is the most recent low. Sorry, I mean lower high. Lower high, lower high, lower high, lower high. And then you have lower low, lower low, lower low, and lower low. So at this point to me, the selling pressure, they are in control, and I have no wish to fight against this strong selling pressure. So how do I get an idea or a signal that, hey, the buyers are stepping in and they're about to push the price up higher? So again, using technical charts, you can do that. And what you can look for is a higher high and higher low. I like to call it high, high and higher low. So you can look something like this. Price hits up higher, okay, makes a pullback, and it breaks out higher. So at this point, you now have a higher high because the price has broke up above this swing high. You have a higher high and you have this higher low. So when that happens, right, this could be a signal for you to get on board this trade. So you can look for the price to break and close above this swing high before you take a long trade on Facebook. And where do you set your stop loss? Couple of options. You can reference this low, this minor swing low to set your stop loss, or this extreme swing low to set your stop loss. It's kind of your choice, right? Depending on how wide of a stop loss you're comfortable with and how much time you can devote to watching the markets. So again, if you look back historically, I think back in 2018, something similar happened. So this is the first, the one over here. You can see over here what I'm talking about, the higher high and higher low. So at this point, right, Facebook was declining down about 44%. So you have series of lower lows and lower highs. You can see lower high, lower high, lower high, lower high. But at this point, right, this is something where something interesting happened. You can see that the shift, right, in selling pressure. So just to point out, at this point, price staged a new high, taking out above this swing high, made a pullback, okay, and then you break out higher and close back above this high. So at this point, you now have a higher. This is the most recent high, higher high and higher low. Okay, of course, you may or may not enter this trade because when the price did break and close above this high, it gap up higher, this much higher. So I think for most traders, they're not comfortable, right, having to pay a premium when the price gapped up this high. So again, this is the reality of trading, and this is kind of like the principle that I was illustrating, right, when the price makes a series of higher high and higher low to time your entry. So if you look again, the most recent downswing, you can see again the same thing happening. At this point, you have a series of price stage a rally, made a pullback, and it break and close above this highs at this point. So at this point now, you have a higher high and higher low. So again, if you can use this as an entry trigger, right, to time your entry to get on board this Facebook trade. And again, the reason why you can look for this specific entry trigger is because Facebook, at least on the weekly time frame, you can see that it's at an area of value at this 200-week moving average, plus having the confluence of this area of support. So at least this is from a technical perspective, a long-term technical trading perspective. And by the way, if you are into the stock markets and you want to use the stock markets to help you generate an extra 10%, 20%, or even 40% a year, right, without starting, financial reports and whatnot, you can actually join me from this upcoming webinar over here, right? I will share with you how you can actually, beat the stock markets, right, without analyzing financial reports or looking at news and whatnot. I'll even give you a simple stock trading system that you can use to profit from the stock market that's generated about 2,421% over the last 21 years. So the next webinar is coming up in a few days' time. You can just sign up. It's free. And even if you can't make it for this webinar, you can still sign up. So I'll let you know when the next upcoming webinar will be. So I'll put a link somewhere below this video. You can sign up for it. With that said, I wish you good luck, good trading. I will talk to you soon.